Hello everyone and welcome to Smart Investing. I'm Albert, the host of the channel. And today this video is going to be about the long-term portfolio of the 25 stocks that I had like a year and a half ago. I made a previous video. So this is basically the updated version for this video. So again, I still have 25, I'm still going to keep it to 25 stocks. There are a few that I'm going to go over that are not on the list anymore. I'm going to put everything in the description. So you're going to see some stocks that are being replaced with another one. I think there are about 10 stocks that are being replaced. And the majority of it is still in the portfolio. So out of those 10, those should have been sold like months ago. Again, you still would have made a profit if you did follow even some of those stocks. And maybe one or two you would have broke even, and I think maybe just one you would have had a few dollars lost. But for pretty much the most part, even if you chose more than one stock on my list that I recommended for that long-term portfolio, you're still up a lot. I can't even think of the percentages because it depends on which stocks were selected for that portfolio that you liked. So anyways, this is the update of the newer and better one because things get updated, things get renewed and stuff. So stocks go up and down. So it's just that time again where stocks have to just be turned over a little bit and just be readjusted. So the first one on the list is still AB. I still had that stock. This was an income stock, if I'm not mistaken, but I'll go over it and then put that in the description. The reason being, I like the uptrend, as you can see, and they still had good numbers. They still have a strong dividend yield. Oh, and I apologize. Today is January 4th, Tuesday. It is 9:42 a.m. So the market is open, but I'm doing this video because it's more important. I'm on a short little break, so I thought I'd do it anyway. So as we can see, let's look at the dividends. I'm going to try to make this pretty quick. So as you can see, the dividends, for the most part, as you can see here, from 2020 compared to 2021. So it looks like in 2021, there was more of an upgrade. So that's still the reason why. I mean, a lot of people, they always go for this. They always go for the percentage. Right away they see, hold up. Right away people see the percentage here. I don't really go for that. I tend to look at this. That is more important than the percentage. Because if you only look at percentage, you're not really looking at this, how much they earn and how much they pay out on their debt. So a company needs to be analyzed overall, and that's exactly what I do. So apparently, I've seen other channels as well. I'm not bashing other channels, but what I'm trying to say is when I see other channels, they repeat the same stocks over and over, over and over, over and over, over and over, and it's just, honestly, this channel is meant to be fun and learning new stocks, not the same repetitive stocks that you always hear. Coca-Cola, Home Depot, or Pepsi, or Apple, or Microsoft, and all these other fans, Netflix, and all, it's always the same stocks. So what I'm trying to do on this channel is get away from all that and exactly go by sector and explain that there's so many stocks that need to be looked at instead of just picking the same old ones. So number 2 on my list, I have that's still in the same portfolio from before, AZN. They still on the uptrend for the majority of the most part. The volume still looks good. They have a strong market cap. I can't remember if this was part for the income or for the growth portfolio, but let's look at the dividends. The dividends they pay twice a year, so it looks like they are a dividend payer, I'm pretty sure. Or they could be both, dividends and growth. So that's number 2. Number 3, I believe that's the same stock I still had. It's still on an uptrend, gone flat at around in July. Well, you could say around here. So August, wow. So beginning, it looks pretty flat, which is normal. Can't go up forever. There's gonna be periods of flat. And at first, actually, this was a growth stock, but I believe they started paying dividends, which is weird. So I still consider this a growth stock. Yeah, I still consider this a growth stock because apparently that's what I had it originally. The volume still looks good, and again, this portfolio, almost every single stock is gonna be below $50. I know before 2021 or between 2020 of March and all the way to the end of the year, I had that portfolio under $50. So what I'm saying is after 2021 and now we're in 2022, it is much harder, much harder to actually find a strong portfolio that has good, strong stocks that are performing pretty good and for years to come that are actually under $50. So that's all I'm trying to say. So the next one up that I have is CCS Century. They are in the home building aspect. I should mention the sector because that's exactly what I should be doing. As you can see around here, they've gone flat. A little uptrend, but again, strong earnings at 12.5. And again, the dividends are still being paid out for 2021. There are a bunch of companies that just started paying dividends. It's just insane, So this company, I believe it was a growth stock, but now they're paying dividends. But let me see. Let me look at the chart again. They still look like a growth stock. So they're still above. They're still above this 200 line. So this point here would have been a good time to jump in. So they're still even above the 20. Oops, and that 50 line. So I'd say a good reference point is the 20. So that's a price you would want to get in at if you like that stock. So next up I have is a ETF. I usually don't pick ETFs, but I've worked my butt off this past week to find the best ETF under $50 that still pays a pretty good dividend. Again, the total dividend, it's not as much as other ones, but again, you're going to be paying more than $50. You're going to pay $100 for more of a dividend. So you're looking at maybe like, let's say, give an example, like a 2.5, 2.5 dividend payout, but you're paying more than $50 for the ETF. And again, this price is very hard to find under $50. I keep saying that. I'm going to keep repeating that because that's what I honestly believe. It's just hard to find a company for the ETF sectors that actually pay as much as this, as much as that. So we have a dividend yield of 4.76. I know people love the percentages, but again, you also want to look at that total return. So we have here for that uptrend, as you can see, It looks really, really good. So let's look at the fund. I want to show you the performance. So as you can see here, all of this has been performing really, really good. So long-term, short-term, even midterm, this would be like considered midterm. This would be like short-term. This would be like long-term. And it's still looking good. This is just a good stock. So this portfolio holds 90% stocks, close to 10% cash. And these are the holdings in that portfolio. Again, this is the ticker symbol DIVO. You can see up top right here. Very, very good stock. And it's only going to keep increasing. Hopefully, the price will keep increasing. So let's go to the next one, CCrn. I do not like the volume. Didn't I get rid of this stock? I believe I got rid of this stock. Let me go. So let me see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25. I see. CCrn. I believe this one was going to get replaced by somebody else. Let me look at that real quick. I can't remember. Let me look at the list. That was under 50. I apologize for not having my stock ready, but I don't have my other list in front of me. So I'm just trying to do this list as I go pretty much. I think it was still a hold. It's still performing good. It was just the volume that I'm concerned about now that I look at it and the market is open. But let's look at the 5-year. So yeah, it still looks like a good stock. If you held it, when I said to buy it, in the previous video for the recommendation of the long-term portfolio. So again, CCrn, this was in the apparel and accessories retailers. Next up that I have is Camping World, CWH. CWH, they do pay dividends. I believe they pay special dividends as well. So yeah, they paid out once a year. This was a pretty good stock, and I believe increasing dividends. So this was actually for income. So again, this portfolio is a mix of income and growth stocks, and then you have income, growth, and growing income, which is growing dividends. So this stock is one of the rare ones that have growing dividends and special dividends. So yeah, Camping World, ticker symbol CWH. Next up on the list that I have is Mplx. They look kind of flat, as you can see, even for the 5-year. But for the 1 year, they look like they have gone up. Volume looks pretty good. Yield is pretty good. This was a new stock actually, for the oil and gas transportation. I can actually look at the same list. And let me remind you too, I haven't mentioned this, but now I'm going to mention it. The stocks that are being replaced, these stocks are still going to be in the same industry. So basically the same sector. They're just being replaced as a stock, not entirely like, oh, let me just go out and choose a new sector and a different price range and nothing. I still try to choose a similar stock that's related to it when it comes to price, sector, and I wouldn't say volume, but price, sector, and I would say earnings. If they pay dividends, I'll still get, the same type of investment. If they were a dividend paying investment or a dividend growing investment, I'll still try to find the best stock that relates to the previous stock that I had before. So I do want to state that. And the market cap, again, that doesn't really matter to me. It's just the price, the dividend, and the analysis, just to see if it's a good stock. So the market cap, doesn't even matter when it comes to the sector, because again, prices change, stocks change, and some stocks do good one year, some stocks do better other years. So Mplx, they do pay dividends, and they pay the special dividend. As you can see, they're growing slowly, so I think that's why I chose that stock. The one that I was replacing for Mplx, I can't remember, but I'm gonna look at this list and see if it rings a bell. We have, it will only take a minute, I won't even be that long. So I'm looking through this. I believe it was it DHT? It was DHT. It was DHT. So that's the stock that's underperforming. As you can see, it broke that support. I can't draw a straight line, but sorry. Right there, it broke that line. So apparently, when I do a stock to buy and sell, it gets broken down into levels. So when I look at the 20, these are points when to sell. Like right there, that would have been a nice sell up to the top right here. Right there, I think I would have sold it like right there. If I would have held this stock, and who knows, it might go up again, so I would still hold it. I think I would have sold it right here. Come on. Why is it not writing? Right there, I think I would have sold. I'm trying to see if there was a trend, if they're selling it during the dividend date. And it looks like 3 out of 4 times that after they pay the dividend, the stock has gone up. Only the past dividend that they paid, it's gone down. So yeah, DHT is the stock. And they don't seem, I think this stock would have broke even if you were to sell it now. But yeah, that's a stock that is being replaced by Mplx. So the next one, let's jump into EVA. This was the stock that's actually one of the super rare ones. This was an income grower and a growth stock. And I mentioned that again in 2020. So this stock is a triple threat, and I will show you why. It has increasing dividends. 1, they pay a dividend. That's 2. And 3, they're growing at a fast rate. So I would definitely keep this stock, or jump in if you want to. Again, this stock is not being replaced. This sector is the forest and wood products. And the ticker symbol EVEA. Sorry, EVA, not EVEA, EVA, sorry. GFL is the next one. This was a growth stock that I chose. I think they do garbage or something like that. Environmental services and equipment. They're based in Canada. And the numbers look okay. I don't know why they have negative earnings. but the chart looks pretty good. Next one up that I have, RYAN, growth stock. Numbers look good. I reviewed it. So for the company, they are in the multi-line insurance and brokers. I believe this company was getting replaced by, was it Goosehead Insurance? Yeah, this company is getting replaced by Goosehead Insurance. So Goosehead Insurance would have been a sell already. So again, RYAN, and this company is still under $50. Next up that I have is RVLV. This is a company that's getting replaced. This is a growth stock. Earnings and everything look good. Take a look at that if you want to. This is in the department store sectors. So I believe they sell clothes and all that. So they have earnings of 1.2. As you can see, low turnover range and everything. So they are a pretty good stock. Actually, let me see something real quick. This stock was actually replacing, let me take a look at the list. This stock was replaced by, what did I have before? Let me see. I think I have something else before. But anyways, RVLV. Next one up that I have, Ccrn. This company, they do employment services, and this is definitely a growth stock. Good earnings per share. The PE was pretty good, low turnover, and a good sector to get into. They do employment services, and they look for basically nurses. I want to say doctors, but basically nursing staff, even temporary or permanent. They have choices for nurses, for travel nurses and local nurses. And basically, they just need employment for healthcare services, pretty much. And with the coronavirus and stuff like that, I'm sure a lot of places need, medical field employees. So that's what they do here. And this is going to be a growing trend till COVID, slows down way more than what it is. Next one up that I have is OMF. This is personally one of my favorite stocks and in my portfolio. Reason being, they are a strong dividend payer and a growing dividend payer. The sector that they are in, they're in the consumer lending sector. As you can see, they pay special dividends once a year. So this company is a triple threat. They're a growth stock, dividend paying stock, and they also pay growing income, and special dividends. So again, very good stock. Probably one of the best out right now. Next up is Marvel. I still have that on portfolio, so that's not going to change. The sector for that was in the semiconductors. They still had decent earnings. I don't know why it's negative, but before they had decent earnings. Share price is at $89. Again, that's over $50, but that was this selection was in the previous video before. CSX is the new stock. The reason I chose CSX, that one's getting replaced by, I believe, Martin Transport, MRTN. So CSX is replacing MRTN. CSX had a split. So that was a good time to jump in. So now that stock is pretty much on sale as we speak. They are a dividend paying stock, and I don't know if they're increasing dividends. Typically the history looks like it, so I'm assuming they're gonna still do good and perform well, so they will be paying, and hope that they still pay increasing dividends. But again, it's still a dividend paying stock, and they still are relatively cheap compared to their peers. Next one up I have is CNC. This stock is a growth stock. This was in the medical managed healthcare. I know the medical field. So yeah, they do managed healthcare. I try to find a cheap stock under 50, but again, I could not, for this sector and industry, I couldn't find a stock that was under $50 as good or strong as others. So I had to get rid of, I'll put it in the description, but this stock is a new stock is what I'm trying to say. So CNC is the replacement stock, and that's the new growth stock that I have chosen for this portfolio. Next up I have is NLOK, NLOK. They're in the software industry. They do like security checks and online privacy and all that. So you can see that the company is focused on selling subscription-based cyber safety solutions. Increasing dividends. They did pay a special dividend in 2020. So again, still a good stock. As you can see on the chart, they're still a little flat. They're still a little flat starting from May of 2021, but again, they still haven't gone down. Next up that I have is Riley, RILY. They're similar to AB, which was the first stock that I mentioned. They're investment managers and stuff like that, but they're more tied to investment banking. So as you can see, they pay special dividends. And the annual dividend is $4. I know this company is a little more pricey, but they're still well worth it. Their earnings are just insane. And this is definitely going to be a growth stock and a strong dividend paying stock. Next one up I have is SGML. This was a company that is being replaced. They do lithium batteries, or they mine lithium to make batteries. Sorry. That's what I meant to say. Well, actually, yeah, they produce battery grade lithium. So this stock is definitely a growth stock, as phones and the shortage with semiconductors, as they say it's harder to find parts and stuff to make phones. So as we can see here, the total revenue, I don't know why it's showing that, but let's look at the 2020 numbers. Net income negative 1.5. I know this company has low debt. I think that's one of the reasons why I selected it. Their earnings are okay. They still have work to do to be profitable, but they're not far away from that. So I would still buy and hold on to this stock, just because of the scarcity and the demand that's going to be increasing for this one. So again, this one is in the sector for specialty mining and metals. Wow, my battery's about to die, so hopefully I am almost done. So next one up I have is IDT. IDT is a growth stock, really strong earnings. The sector for this one is integrated telecommunications. Price is under $44. So yeah, they just do cloud communications and traditional communication services. Next one up, Stag, a monthly dividend payer. I got rid of Maine. I can't remember which number on the list that is, but Stag is pretty much still strong. Maine, I don't really like too much anymore because they had a dividend cut. That just kind of clicked into my head because now I see Stag, the monthly payer. I was like, oh, okay, now it just kind of clicked. But Stag is still in the list, and they are a commercial REIT. VRS, I believe that was still on the list. They're still a dividend payer and growing dividend payer. Earnings, I don't know what's going on with their earnings. I don't know why they say negative, but this is still a good stock. Sorry, let me just show you the industry that they're in. They are in paper products. So I'm almost done here. This one is a triple threat as well, one of the super rare stocks. They pay dividends, they're a growth stock, and they're paying increased dividends. So these, let me see, these dividends, okay, yeah, they pay quarterly, and the stock has gone up since last year and pretty much flat. So when we look at the dividends, we see the dividends there at 47 cents. Whoa, it looks like they stopped increasing the dividends. I'll still hold on to it. I mean, for the history, maybe they're having a pause, but still, it's still pretty good. This company's still pretty good. So the last one that I have is not this stock, but I chose this one for the industry, and it was neck and neck. This company was a maybe. The company I believe I had to replace this was ACI. That's the company that's replacing it, ACI. So I got rid of Wilk, WILC, and it is being replaced by ACI. And again, ACI at first was a growth stock, and this is a new IPO actually. It only appeared just back in, let's see, around June of 2020. So it's still fairly new. And again, where is it at? WILC, I think it's in here, right here. So yeah, the reason I don't like Wilk is because of the volume. They have really low volume. And you can see the stock is starting to dip down. You see how after the dividend, it kind of, this little bar here, right there, and it went under this line here. So I probably would have sold right here if you forgot to sell like beforehand. So again, this would have been a sell point when it touched the 20, like right here, right there. Sorry. So yeah, that's all I have for you. Wilk is no longer there, and ACI is replacing it. Thank you guys for watching. I know this is a long video, but a very important video. This is not your average channel. This is not a boring channel. I try to provide different names, different stocks, uptrends and all that. So I hope you liked this video. Like, comment, subscribe. I'll try to do more videos more often. I know I keep saying that, but I only do it when I have time. So again, thanks for watching. I'm signing out. Have a good day, and choose some stocks and invest wisely. See you guys in the next one.